Hey everyone, Tom here. In this video, we'll be talking about our technical analysis levels for the S&P 500, NASDAQ, and Dow Jones, as well as a special look at Amazon and the key technical levels you'll be needing to look at. Implied volatility has risen due to all of the earnings results that are happening right now, and I think it's key that we look at these technicals in the market. We'll also be covering my thoughts on the Fed or FOMC's meeting and what was said and what it really means for the market, along with the latest stock market news. This one should be good. Stay tuned. So as we like to do together, let's have a quick look at what's going on in the markets right now. Well, the clear thing is that we've seen a bit of a reversal of yesterday's gains. Pretty much most of the gains have been taken away. We have crude down and we also have the VIX up. If you don't have a screener like finviz.com, I highly recommend you look at one of these as a trader or investor. It just gives you a quick 20-second look at all of the markets and you just get to say, okay, I know what's going on broadly, then you can dial down in. So definitely worthwhile having a screener of some sort. In terms of what happened with the Federal Reserve policy meeting, obviously it's pretty normal for what they've been saying. No rate rise for the foreseeable future. They're going to keep their programs for the foreseeable future. The September meeting is probably going to be more of the same. And really all I heard was uncertainty, uncertainty, uncertainty. We have no idea what's going on. Basically, the Fed, as well as everybody else, have absolutely no idea what's going on in the economies right now and what the true damage to the economies is. So for now, it really is that they're going to keep the policies and they're going to keep the mantra, do whatever it takes. So all we can do is say, okay, we are dealing with a semi-manipulated, if not fully manipulated stock market right now, and we have to look for opportunities in that stock market using technical analysis and also potential dip buying techniques. So that's something that if you're interested in, definitely remember to subscribe and hit the alert button on this channel, as it's something we cover on a daily occurrence every day of the trading week. What I really want to talk about today though is the big tech is basically doing a massive report today. We have Apple, Facebook, and Alphabet, and of course Amazon all reporting after hours. What is this going to do to the futures? Well, we have an implied volatility of a 5.4% average move on each one of these shares. Yes, that's right, 5.4% average move on Apple, Amazon, Alphabet, and Facebook. That is an unbelievable one-day move, considering we've seen fairly lackluster moves in terms of a lot of these stocks over the last week or so. So a lot of implied volatility coming back into the markets. When we think about how big these companies are, it's clear to see why. It's $5 trillion between these four companies by themselves. And if we look at the total market cap of the S&P 500, it's only $27 trillion. So we have an incredible amount of market cap size reporting today, let alone the other companies that are coming out. There's no wonder the VIX has slightly come up, but it's still holding that technical level. In terms of the level that we've been seeing it hold, it's basically been bouncing off that 24. And remember we mentioned whenever the volatility index is higher than 20, you can see incredible spikes like we saw with that big kind of flash crash that happened on the markets only a month ago. And that could happen again at any time. It's theoretically possible Wall Street could do this to us as traders. I think the first key index I want to look at today is the Dow Jones. I kind of really reiterate what I said yesterday, which is the market is continuously testing key areas ahead of all this news this week. We've talked about how many key bits of news are coming out, but this is really the key level here on the Dow Jones. So we've got this level, basically it's this 26,300. It's acted as previous resistance with what we like to look at, which is the body closes at this level. We've got body closes here on the daily as well. That's our resistance and that's acting as support. At the same time, we have the 200 simple moving average, the green line, and we've got the 20 exponential moving average all sitting here. So just like yesterday's analysis, I'm reiterating that ahead of critical news, we are seeing it gravitate to this zone. And this is the futures ahead of market open. So you can see how it gravitates there ahead of what will be a blockbuster earnings report. On top of that, we have the NASDAQ, which pretty much the NASDAQ and those big companies really hold the key to what's going to happen in terms of sentiment. If they miss And of course, ads are really going to be the big forefront for things like Facebook. If they start missing, we could see key breaks on the NASDAQ. One of those key breaks is, of course, seeing the 10,500 get taken out, a close underneath that zone, which we've spoken about before. We need a close bar underneath that, as in the candle on the daily will need to get underneath. And then what we'd expect is probably down to the 50, a bounce up, a retest of the previous support, which will become resistance in role reversal aspect. And then hopefully that lightning bolt down after that point, if you're looking at the bearish side, where it would further signify shorting. Remember, a double top in terms of what this pattern would become is effectively the distance or the range extrapolated out, and that will bring you back down to pretty much previous highs before this crisis began. So all of this could happen in only just a few days, considering the implied volatility that we're seeing in terms of the average expectation of move today off earnings reports, if they aren't up to scratch. Now, I'm not sure what's going to happen. Nobody is, but that's why you follow the price action and the technicals more than you necessarily follow your gut instinct with anything. If you're doing fundamental analysis and that's the way you like looking at stocks, then of course you're going to be looking at the facts and the figures, and they usually couple up really well with technical analysis. So I actually highly recommend that you bring both together into your plans and your structures, and you'll find they work very well together when you do. Onto the S&P 500, the kind of most important signal of them all. And we have some bearish movement coming into the market open, coming into this day. We've talked about how that 3200 zone and the 3230. So if we were to draw a range, we have the previous 3230 and we have that 3200 zone down here, has acted as a range for the market where support has been found. We've got that 20 trickling up into this zone now. I wouldn't be surprised to see it kind of short or sell into the 20, hover there, and then after hours, the futures will become an interest. I'd actually think that if you're a trader or an investor right now, why not go and today check out the futures during that earnings period? Get down into a 1 minute, 5 minute, and let's see how fast these futures move after the reports start coming out, because it's always interesting to see that. I think it's a little bit exciting, and it's what part makes trading so interesting. There's always a new thing and a new event coming, but I'll never forget the US election in 2016. That was a wild day, and I remember seeing massive amounts of money transacting, and by the end of the day, obviously the market had fully recouped all of its losses during the futures session. It was pretty unbelievable stuff, and this happens time and time again, and it's what makes trading so interesting. So we've got this level that's being tested, the 3200, 3230. We expect it to kind of remain in that range until we see what comes out of these reports, and then it will choose a decision. And that's why probably this weekend is going to be very important to get in front of your charts, look at the confirmations that have happened off this week, and then start to get a formulation of what's going to be going on in the markets next week. So we're really trapped within this range for now. When we go to Amazon, it becomes clear again that this share is going to show part of the way of what's happening. We've got this 29.25 zone in terms of where the last body close is. It's pretty much a double top in terms of the body closes. And if it breaks through, very similar to the NASDAQ, it's predicting a fairly large move. So pretty much if we get the change of trend here and we get this to break down and below, it's signifying that Amazon should go back to $2,600. And that's a pretty significant kind of change. It would make sense to the previous support, previous resistance zone. And I'm sure that if this was to happen, I'm sure there'd be a lot of happy people to pick it up at those prices. They'd be looking at buy that dip, buy that dip. We must remember in this market, there's a lot of demand on the way down from retail traders and institutions that missed this big pickup. On gold, we've seen that kind of topping effect happen again. So gold hit that high, that 1980 just before 2000 an ounce, and then it came back down very aggressively. This type of market condition where we see that big blow off usually signifies strong selling pressure if it gets back to the top, which it did. And then this is going to be that self-fulfilling prophecy where we see the resistance act as resistance again and then sell off. And that's what's happened here with gold. It's coming back down at now, and we might even see it go back to 1925 and potentially find some support there. What I would be thinking though is that it will continue to find some support around this 20 exponential moving average, purely just because of what it did previously and what it's done before throughout this trend. So for now, gold still remains in that kind of range bound area, with this key resistance really being such a critical level now that you would want to be setting alerts for up here and knowing that the market, even on the shorter time frames, has found respect there multiple times already. So probably will continue to do that without big key news coming out. If you've enjoyed today's video, please make sure to subscribe and of course hit that bell. Stay safe, everybody. Happy trading, and I enjoy to be there when all of these earnings reports come out and to see what's happening in the markets, because I think it's going to be fireworks. Bye.